And we are live, Howard.
Welcome, everybody. It is the last day of April, the beginning of buy in May and go away. As I call it, it's no longer sell in May. Get into that a little bit later. Welcome, my good friend and partner, Ivanov.
Hey, Howard. How are you?
Are you in Venice or San Diego?
Somewhere in the middle.
We got to get you a green screen, buddy. We have a low budget here, but low budget begot. It is time to go around the world and follow momentum as we do. We took the week off last week, but as we do most weeks, and we have a partner in our charts in MarketSmith, which is a division of Inner Investors Business Daily. We love their charts. They gave us access to them, and so we are going to turn this video podcast over to MarketSmith in a second, Ivan. But one of the charts I want to start with is what I'm wearing right now: Lulu hat and Lulu shirt. I'm wearing Lulu pants right now. Oh, I just hurt my leg trying to show my pants. But before we get to the markets, let's just start with really a stock that's the epitome of momentum, Lulu.
Lulu. Yeah.
Everything that's not supposed to happen, as we talked about since it broke out above 80. I imagine now people are just seeing the chart, Ivan?
Yes, they should only be able to see the chart.
People, you'll get used to seeing the charts. There's a lot of information here. This is what makes MarketSmith great. Before there was social, all I knew was looking at IBD. And once you get comfortable seeing these charts over the years, now that we're taking the show a little more seriously, I think you'll get comfortable with how we see relative strength and how Ivan and I apply social relative strength on top of this. and MarketSmith does, they totally get where Ivan and I are going with social relative strength. But these, you can see relative strength of 96 here. And Ivan, is there a way for you to mark it while we go or no?
Away from me to do what? I'm sorry?
Circle what I'm looking at or no?
Oh, sure. Yeah, absolutely.
Yeah, so relative strength there, 96. It's kind of just been, since this volatile breakout, kind of just straight up. You see S&P relative strength flat above it, and the stock just keeps rising. We can get into all the fundamental reasons, but it's a combination of just nailing retail, nailing margins, nailing monthly to semi-monthly turnover in their stores, and I don't know. It's hard. It's in a time where retail has struggled. They are defying gravity, and that's what makes for great stocks. People just are scared of owning this, and it goes up a little bit every day.
It was a gap and go earnings, earnings gap basically. As you can see, it gapped up on better than expected earnings. It's consolidated for like 3-4 days, and it's been a relentless upward movement since then. So it's clearly under accumulation. And I think the main reason is the acceleration in earnings growth. You can see here it went from 3%, 19%. Last quarter, it was 33% growth in earnings. And also sales are accelerating as well, which is a big testament that, it's not just accounting gimmicks, it's an actual organic growth.
Yeah, and I wrote about it a month or so ago. My daughter came home. She's cheap in a way. My daughter, she doesn't like to spend a lot of money, as all millennials are, even if it's her parents' money. God bless her. And she just, these little shorts that must have cost $2 to make that they're selling for $70. And she was excited about it. My daughter is not the type of person to get excited about fancy things. Not that they were fancy, just expensive. And, it's they've won this age group from, I call it the 8 to 80. This is becoming an 8 to 80 brand. And I'm excited for the company. We haven't even talked about international expansion. So even in horrific industries and in choppy markets, the point is great stocks, are breaking out all the time. Okay, so Ivan, now let's go back to you and let's just whip through the markets.
Okay, let's go back real quick to the S&P 500. It continues to struggle below its 50-day moving average, and some people may argue that it's making lower highs, and so far it's been finding buyers near its rising 200-day, but as it's making lower highs, it's getting more and more dangerous in that dangerous area. And what's most interesting is that this is happening after companies like Amazon, Google, Facebook, Netflix, they absolutely crushed earnings estimates. Like, I don't know if the analysts, kept their estimates artificially super low, on purpose, but the numbers that came from those companies were just so much higher than what was expected by the market. And then we didn't see the favorable market reaction that we usually see.
Well, it's a good point, Ivan. It's a market of haves and have-nots. So Netflix, Amazon, Apple, they have subscription businesses. They are uncommon value in their services that they offer. They have a complete lockdown on growth. They have pricing power, and they're not going to carry the market. They're eating the market. And so it's a really, trading the S&P in an era, this is what I keep going back to, it is a market of stocks. And you say this too, there's unbelievable amount of people just plowing money into passive management, but smart allocators are finding, unique stocks and creating beta by not staying long 500 stocks, but by picking, stocks with gigantic leverage effects. Okay, so now keep going. You wanted to go through some individuals.
Yeah, let me just finish my thoughts. And I think the market reaction to earnings is the actual representation of the current market sentiment. And in a good market, those same earnings reports would have led to 10-15% gap ups and then immediate continuation, as we saw in Lululemon. But for some reason in this market, this is not happening. We're seeing an immediate fade, which is kind of concerning to me. And the way I read it, it basically means that it's very likely that the market averages will remain in a range for the foreseeable future, maybe for the next 3-4 months. But then under the surface, there will be some individual stocks that will continue to defy the range, and they will either trend up or down. So that's why I titled this show "The Stock Pickers Market," because I really believe that it is the stock pickers market.
Yes, it is, and you can still passive. I just think people need to, as we do here, we're trying to learn the language. I think people, and this is Momentum Monday. There's, even the best passive investors in the world, and I say that as ETF investors, should try and find 4 or 5 brands that resonate with them, that are breaking out, watching shows like this, and following the right people to add a little juice to their portfolio. There's no reason to be lazy about this. Okay, so S&P, I think we're going to say the semiconductors are the weak link here.
Absolutely. I've already saw 2 of them that are pretty big, Broadcom, and before that, Taiwan Semiconductors. Both of them came out with warnings about soft demand. So there's definitely reason for concern. I mean, people used to call the commodity copper, Dr. Copper, because it predicted how the economy is likely to do in the next year or so. I think the modern Dr. Copper is the semiconductor index, and I think it's a leading indicator for where the economy is going.
Yeah,
and it's really important to watch what's going in semiconductors. It's been the undisputed leader and this year is definitely one of the weakest sectors. Definitely something to pay attention to.
Yeah, I think it is. Look at the relative strength. It didn't hit new highs when the semis hit new highs, and now the relative strength. There's just so many industries stronger than semis, and we need semis. Tech needs semis. Now the question is, are we got over supply? As always happens to end a semi cycle. These are cyclical stocks that have been acting like growth stocks for the last 4 or 5 years because of NVIDIA, because of Internet of Things, because of robots, because of drones, because of quantum computing. So again, no reason to panic, but you want, they're like banks. You want them to be doing well. And maybe there's just, maybe just time takes care of this. But with that relative strength at 66 and yearly lows, and I think you have to just have one foot out the door. In general, we could look at banks. There's NVIDIA, the strongest of the strong, marking time, nothing horrible. But again, you want to watch, this is the leader of the space, and go to the banks. The other industry you want to be doing well, and they just can't gather any steam. Supposed to do a little better in rising interest rate environment. They're not. Stock markets at all-time highs, trading volumes at all-time highs. The brokers just can't get to the next level. So there's some tiredness, there's some heaviness in this market. Not the end of the world, but at the same time, I prefer to see these stocks strong before I commit 100% to the market. So not lots of great ideas. It's just you got to just know where the markets are. Okay, Ivan, specific stocks. Let's go through your list.
Okay, let's go through some specific ideas. One of the emerging market stocks that is acting really well, and I know it's one of your holdings. It's called the MyTrip. It's the Priceline of India.
Yes, it's
definitely showing
capital. The public venture market stock that I've talked about on my Laugh Trade Profit Peloton product, monthly product.
It's a daily time frame. Here's a look at the weekly. Definitely building a beautiful base. You can see like a huge cup and handle. So 40 is the obvious pivot point, and if it ever gets above it, I think we'll see even more momentum going for it. And if you're willing to play the same trend, more people from India traveling as it happened in China, there is a smaller stock that is also from India. It's YTRA.
Huh.
It's not doing as well. Definitely very weak relative strength, but it's in the same industry, and they're also trying to cater to the high-end market in India. But I think if this stock goes above 8, there's definitely something to pay attention to. It's just if MMYT does well, this one will follow. So
or the good one. I prefer just go back to MMYT.
Okay, sure.
Because this fits with what we do. This is where momentum is. The market having a tough few weeks. MMYT firming up and acting even stronger and we're seeing this with enterprise stocks too. So don't know if this is in the SL50, but let's get to that.
It is. And then I have a few Chinese names that they're acting well. This one.
Is this a dating or job site? I think it's jobs.
This 58.com, the Chinese company, Wuba.
I think it's jobs. Oh, beautiful looking. Yeah.
It looks good on all time frames, and it broke out to all-time highs today. Let's see if it can hold it, because there's definitely been quite a few failed breakouts.
It's doing well in the face of a lot of Chinese weakness.
Yes, and another Chinese name that is acting very strong is Noah Holdings, which is like a mixture between Goldman Sachs and Schwab for Chinese high net worth individuals.
Yeah, this is on my list. Obviously, I've been recommending this a while, since the 30s. Nothing's changed here. I think Schwab as well is leading US still.
It tried to break out today, and it reversed with the rest of the market, but it's definitely holding a lot better than the rest. And you can see as the S&P has
the relative strength perking to new highs, even though the stock's almost 5% off new highs. So I like that. Look at Schwab. Schwab's kind of defying the U.S. brokerage. Still very strong. Yeah.
Yeah, definitely. And another Chinese name that people should be keeping an eye on. It's I think Baidu. It's a big play on AI, which is the next hot.
They sold off their fintech division. I don't know if that's good or bad. It doesn't interest me, but there's just I got my Chinese exposure in Tencent, and I just kind of there's so many good U.S. names. So let's get back to your list.
Okay.
Tencent's been weak, but I'm not adding here, but I'm still
looking weak. Yeah, definitely. If you can lose the seats 200-day here, I mean, it looking like a bear flag on a daily, but you have a longer term outlook anyway. So
yeah, I have a much longer.
So
again, this thing in the mid 40s to low 40s, I'd be accumulating.
Yeah. So real quick, last week we saw incredible strength in restaurants. All of a sudden, you remember how in 2017 they struggled because the market punished them because of rising labor costs, and many of them went down 20, 30, 40%. And this year, they're one of the leading industries. And last week, we saw a very strong report from Chipotle, Mexican Grill, and being heavily shorted, we saw a major short squeeze. And after last week's move, most likely they'll spend the next couple months.
Yeah, my daughter continues. She bought some shares. It's not a typical stock for me because the momentum had basically dried up. Now we can see 91 relative strength, despite their weakness over the last 3-4 years. There's no serious national burrito chain. We can argue about the quality of the food. Chipotle is going to figure this out. So I think you've got to put that back on your restaurant list. I'm still trying to fill in a stock to replace Starbucks. There's McDonald's, there's Domino's. I mean, I like Chipotle's product. I just don't go anymore, and I think their marketing's been off. But I think with a good marketing campaign and an improvement of the product, I think this stock if they can improve the product a little bit or fix the menu a little bit, this stock is being accumulated big time, bigly. McDonald's had a big day today. The restaurant stocks just had a great month. McDonald's had a big day today. I'm a big fan. I think Uber and McDonald's is a great partnership. This is an 8 to 80 stock that I've been thinking of adding. Again, I'm thinking through my 8 to 80 list and trying to find the right restaurant leader here. Relative strength weak. I love the food. I hate to say that. I think in talking to some of the McDonald's digital people last week in New York, I think on Uber Eats, the fact that McDonald's has the Big Mac as a product is a draw. When 8 people are drinking or at home late or at a weird time studying and want to do Uber Eats, McDonald's is at the top of Uber Eats. You can feed 8 people for $40. McDonald's is doing priority service around orders on Uber Eats. I think that's just found money. McDonald's has that distribution built in. So I think McDonald's could shock and awe people over the next 5 to 10 years as more of a technology company. And I think this stock may surprise a few people. So I think Chipotle's and McDonald's are interesting. Domino's, if the product was better, I would be more excited. I hate when there's so much choice in good pizza. I just am not a fan of the product. I'm a fan of what they've done as a company, but it's an 8 to 80 brand that I just won't add, even though it's been a great stock. So those are the leading. Is there a restaurant I'm missing?
Shake Shack is doing pretty well, but they report earnings this week, so we don't know how the market will react. But definitely last week, they want to
go longer term on that, Ivan.
I'm sorry.
Go longer term on that.
Absolutely. Let's go to a longer term.
Yeah, it's still a mess. I think my problem with Shake Shack is valuation mixed with I don't love the product. I mean, again, I'm not the age anymore. Burgers, I'm very specific about burgers because I'm 52 and my stomach just can't digest them. And it's such a salty product. And I don't know. I think technically it looks good medium term, but I'm going to let the bulls have this.
It's a highly competitive industry.
Very competitive. I don't love the product. Again, that's just.
I agree. It's not an amazing product, but let me just give you a quick example. Like there is only one store, one Shake Shack in San Diego. It's in the UTC Mall area, and every time I go there, the line is probably 40, 50 people deep.
Wow. Okay.
So it
In
is
Phoenix, it's not that busy. I've gone to a few, maybe because the Phoenix market is just burgered out. But I hear you. I hear you. There's a ton of room for growth. That's the play on Shake Shack. I just think McDonald's has their shit together good enough, or in an Uber Eats era. But I don't know. Technically, that's a trade there, medium term. Okay, so we've covered restaurants.
So let's cover a few other setups real quick. This one broke out to new all-time highs last week on strong earnings. It's consolidating sideways ever since. So keep an eye on it. It needs more time to consolidate, definitely. Another one in the medical devices space.
Medical devices, IHI has just been a huge winner. I don't.
ETF. Okay.
I think IAH or IHI or what is this? Yeah.
This is it. Yeah. IHI. It's the medical devices ETF.
Yeah, a lot of the technical. This was showing up on a lot of technical screens. So it's been basing in here after a great move the last year. But some of the stocks, like you said, a lot of the stocks are doing well.
Yeah, I mean, as I said, biotelemetry is one of them. Broke out last week and is consolidating ever since. Definitely one that I'm watching very closely. A big breakout today in this biotech IMMU. Let's see.
Yeah.
Let's see if it holds, because as I said, we are starting to see more and more failed breakouts. Like for solar, it's a good example.
Okay, so let's go through two failed breakouts. Here's First Solar. I wrote about it this weekend. Again, I don't love chip or semiconductor or solar stocks just because of the competition, but it looked beautiful. It looked textbook.
Let's go on a weekly.
Yeah. This is a point of either just being a tough industry combined with a little bit more of a tough market, where surefire breakouts that normally just work are not working, and that's okay. I mean, you can't win them all, but you have to be really careful, because from these failed moves can be really dangerous if you're not using money management. So that was one I liked. Zillow was another one. Again, this is more fundamental to the business. They made a big announcement changing their business model, but really strong breakout, and it just kind of sunk back into its base. Not the end of the world, but this is a potential 8 to 80 brand that just looked beautiful for a month or so, and then it just as quickly has kind of fallen back into its long base.
Well, they surprised everyone a few weeks ago when they announced that they are actually starting.
Good move. Yeah, they changed their business model a little bit. They're attacking their customers a little bit, but that may be the move that they have to make.
But they also said that they're buying actual real estate houses in Las Vegas and in Phoenix.
Yep. To compete with some of the startups. So again, looks like a breakout. If you're just taking breakouts back in March, it was beautiful above 50. It paid you for about 2 weeks, and now you're underwater. So again, not all these breakouts are working perfectly. The markets are kind of shifting around, like you said, into medical devices, into select biotech, into some restaurants. And it's all the winners have some tech element to it, whether it's McDonald's and Uber Eats and a better menu, whether it's but mainly tech focus. And you're pulling up oil because
it's still strong. It's still probably one of the strongest sectors, and we still see decent setups in the space. I mean, of course, the energy stocks don't move based on earnings; they move based on the price of crude oil, and crude oil is looking strong, and therefore energy stocks are looking very decent. So
DBC, which is a commodities ETF, which I've been long. Also, boring, but relative strength hitting, made multi-year highs. So commodities are strong. I don't know if that's good or bad. I just can't follow these because they don't have, it's not a growth play. It's more of a, somebody loses when they're winning play, and mainly the consumers. But, money is flowing into hard assets here in commodities and oil. So, all right, we'll leave it there. If people want to follow this quite simply, obviously, we've created a product called Market Wisdom. I'm walking quickly through how it works. This is the easiest way, other than Momentum Money, to stay caught up on what is working. That is the idea of Momentum Money. Find out what is working.
Yeah, I mean, Market Wisdom, we, other than swing trading and momentum investing ideas, we offer, also our own list of 50 stocks, which are the current market leaders.
Can you show it? Can you show this week's?
Absolutely. Give me a second.
Marketwisdom.com. I don't know. How much is it a month, Ivan?
It's $99 a month. Let me share my screen.
A year, $1,200 a year. I don't know this discount. This is really, you can check this once a week. It is your analyst in a box for everything that we do. Ivan and I built this for ourselves. Over the years, we turned it inside out. Ivan runs this as a business. Basically, you get this and Ivan as a mentor in a box. Because Ivan loves doing this. This is a full-time job. But anyways, there's no secrets here. We've created our own momentum list and cured it around social activity as well. But I think one of the most important features here is how we track new entrants into the list, how many weeks they've been on the list. But we pride ourselves on finding the best ideas. Stocks that do well tend to have done well previously. And while not a perfect solution, we believe the best stocks come from the list of the best stocks, the previous year and 2 years.
It's a great pond to fish from. I mean, we take into account the factors that have historically proven that have produced, big winners, like price momentum. That's why we're showing distance from.
We'll go through this. Netflix been on there 11 weeks, and it's had a 25% gain since their Amazon 40% gain. So we're trying. First Solar obviously today was a big reversal. Let's scroll down the list. Obviously, in a great market, these stocks can stay on the list for a very long time. What's the longest something's been on the list?
I think right now it's probably Amazon. Also, this one's Splunk.
24 weeks, up 50%.
Yeah,
so we're not looking for 1 week trade ideas. When you see a lot of new companies coming in, that's good and bad. That means the market's strong enough to have new companies, but you obviously prefer to see stocks being on there for 10, 20 weeks at a time, if not 50 weeks.
Definitely, cybersecurity has done well. RPD, FTNT have been on the list.
Yeah, Okta enterprise stocks continue to do well.
Yeah,
you see some biotechs in there, but you see a lot of software. You see a lot of internet stocks. And one thing that I do when you're getting ideas from me, that I'm looking at this list, and I'd like to find, if my ideas aren't showing up on this list, there's a disconnect. So I like to see when the names I own are showing up on this list as well. Okay, and then let's talk about losers for a minute. What happens when momentum dies? It's really interesting cross section to end on, Ivan. Let's pull up Procter & Gamble, because there's a huge opportunity happening in this space.
Okay, just 1 second. I can pull it up. All right. I need to switch screens real quick. Let's go back to Market Wisdom, to MarketSmith. Okay, Procter & Gamble.
There is a lot of pressure in this market right now. Let's scroll back out weekly, maybe. Talking about this the last week, because we're starting to see crash like, can we go back to 08? Yeah, we're starting to see crashy like characteristics in the consumer, what's generally a safe sector. So generally when the markets are weak, this is where money flows into. Right now, the markets aren't so weak to make you, it's surprising you. And so there's some pressures happening. There's a big change happening. And you can see relative strength of 12 on this, Ivan, as well. So something's going on. You have a combination of pressure from Amazon on retail, and you have a pressure of Amazon on private labels. From socks to shampoo to toilet paper. You can see it in Kimberly-Clark as well, KMB.
I think one of the major reasons is the rise in interest rates, because when interest rates rise, usually high yield high yield consumer staples underperform, and we can see the same in cigarette companies, in utilities, in anything high yield that absolutely crushed in 2014, 2015 when interest rates were declining. It's just reversing right now as interest rates are rising. So, I mean, I agree with your thesis, but also know that interest rates are also a major reason behind.
Yeah. No, what I'm saying, people are used to buying these dips, and unless, that's what I was getting to, when momentum dies, it may not. It's not just interest rates in Amazon right now. It's the fact that there's thousands of brands started up. We talked about this at Stocktoberfest, that these stocks may not be the safe havens they are. Or if you want to buy the crash, make sure they're 40% down. One of the stronger ones is J&J, because they have biotech and medical attached to them as well. So if you're going to play this kind of end of momentum, be careful of the ones that you own, because this seems more secular and then cyclical, with the combination of forces at play. So that's why we like to stick to the strongest stocks, or what I call the 8 to 80 stocks when they are weak, buying the best brands when they're weak. But you also have to always be alert for secular trends, which seems to be happening to the consumer product goods. Okay, end it there. Thanks, Ivan.
Okay, thank you, Howard. Let me